All right, it's May 2nd, and all of these options that I have on these three juicy puts are about to expire. And so I think, we're in the middle of a green market. We've got an uptrend, kind of mini uptrend going on, at least in this first stock and the other two, as I'll show you in the charts. So what I think I'm going to do is I'm going to close out all the juicy puts on all these because I've made good juice for the last 3, 4, 5 weeks, however long I've been in it. But at this point, I'm looking at the charts going, I don't think the juice is worth the squeeze. So let's start with Best Buy. We can look at Best Buy here, and we're seeing, it did hit that nice low of 54.99. And I started this about, up in this area, 67, something like that. We got a nice down, and now we're kind of sitting through the up, and it's back to 67. And so I think I've made my juice. I think I could probably get out of this, and I'll show you the math in just a second, and we'll make a decision here together after the fact, because I think I'm just looking at the chart going, it's time to unemotionally get out. And the stock could go up, the stock could go down, but this is showing that it's going up on no volume, which tends to mean that it's going to come back down. But I just don't want to guess. So I'm looking at Best Buy and going, all right, that one, let's get out of it. The next one is DHI. This is DR Horton. And you can see this has been a horrible chart for DR Horton, all the way down from 200 bucks to 110 or whatever, it hit the swing point. And I've been in it, since like this area here, we're 127 or something like that. And that's when I started it. I just did this little kind of shallow, bought the put shallowly, like right around the strike price, or maybe $1 in the strike price in the money. And then I just sold $1 out of the money or something like that. And you can go back and review the trade to find out exactly what I did, and I'll show you the math in a second. But to me, this is like right around the 50-day moving average. Looks just like the other one. It's off the bottom. So are every stock off this. We've had a big 20% pullback in stocks, and everything's kind of doing a dead cat bounce right now. But if I'm just reading the chart, I'm going, well, it's not that convincing of a bounce. But nonetheless, I don't know. This could keep bouncing, right? It could just be a low, slow bounce, and there's no reason for me to go the other way. This whole trade is designed to move down, okay? I make my most money when it moves down. Like a covered call, you make your most money when it moves up, contrary to popular opinion, right? Or popular belief. It's really opinion, because you make your most money when it does move up. So this juicy put strategy, you make your most money when it moves down. Well, I want to take advantage of that. Well, now it's moving up, so I'm not able to take advantage of it as much. If I stayed in this, it would be fine, because I'd be collecting the juice. So DR Horton, we'll put a checkbox and say, let's get out of that one too. And then the last one is just a newer position that I've got, and it's JD. This is a really weird looking chart. Look at all the gaps everywhere. I'm amazed. It's this Chinese stock, but it does 10 million shares a day. Average volume is 16 million. But look at all these gaps. It's just bizarre to me. Anyway, to me, it looked like it bottomed here at 32.72, 31, something like that, at 32. And now it's bouncing up. We had a gap up this morning. It's up $1.66. Do I want to take a chance that this thing's going to go back up over the 200-day moving average? I've made some money on it, I think, and I've made the juice, and now it's bouncing back up. And so I think check mark number 3 goes on JD.com, so I'm going to get out of that. So let's go and look at the positions now totally, and I'll show you where we are today. So Best Buy, I've got the 85 puts, right? The stock is at 67. I've got the 85 puts. They had a 78 delta, so it's moving shallower, higher up, which means I've lost some delta. I believe I started with a much higher delta than this. And so now I've got the 68 puts, which is kind of right where it is. And you can see there's not much extrinsic value left in those. So, by the end of the day, in another couple hours, that will be zero. I could wait because that is 400 bucks. So I might wait. Let's just kind of work through it together here. All right, the next one is these DR Hortons. Remember I told you I own the 125 puts? Notice the option delta on those is a minus 42. So that's because it's now less in the money than it was, because the stock has now moved to 120, almost 127. And so I've lost some delta here. But you know what? This has been an interesting delta play. There's only a nickel left in that. So I'm going to get out of those because that doesn't cost me anything. And then the same thing, there's only 2.5 cents left in this JD.com one. So I want to get out of all this stuff, right? So why don't we start at the top and just go ahead and reverse these trades. We're going to create a closing order. We're going to buy at the market, confirm and send, and that's one. Okay, so we're out of that. All right, so now we got these longs, so we're just going to click here, create closing order, and we're out of that right now. Okay. All right. And I will do a little math summary here in just a second. All right, so we're out of that trade now. So no more Best Buy, right? All zeros, yes. All right, DR Horton, there's only a nickel left in those, so why don't we go ahead and get out of it? You got to get out of the short side first. Create closing order. We're going to buy at the market, get out, okay? And there's probably a faster way to do this on Thinkorswim, you know, where you can select a bunch of orders, but I'm lazy and I don't feel like doing the research, so, and then we're going to get out of that one. Okay, so now we're out of all of those two. So let's just make sure we got all zeros. Yes, we do. Okay, good. All right, now we just have one left, and that's this JD.com. And let's go ahead and do that. So we're going to buy back the puts, create a closing order, market order, and we are out of those. And back to our monitor, and we're just going to get out of these guys too. Create a closing order, and at the market, and get out. Okay, so there's 6 orders real quick. You can see how quickly you could do them, especially if they're market orders. You're not waiting for them to get filled. You just trust that they're going to give you a good fill, and they usually do. So we have no more positions left in these juicy puts, okay? Now, you're going to look here, and you're going to see all kinds of weird numbers and all that stuff. But the bottom line is now I'm going to show you the math video on this so that you can kind of get a feel for whether these positions made money over time or lost. Remember, my goal was to make the juice, regardless of whether the stock went up or down. I'd prefer it to go down, right? Because these are puts, so they make money for us when it goes down. This is a bearish strategy. And for a while, we were doing really great. The stock kept moving down, and we were doing great. We had to spend some money to buy back. But at the end of that, I'm going to show you in this math that it's just the juice that we're going for. So here we go. Okay, so here's the run from Schwab. And so you can see I just got out of those positions here, and they're all in here. So you can see all the transactions over. I started this March 10th, and here we are May 2nd. All right, so it hasn't been quite 2 months. And this one kind of didn't go the way I thought it would go, but we still made the juice, and that allowed us to prevent loss of money when the stock started going up, which is what the problem was. Had we just taken our profits last week, I think we'd have been fine. So you can see this was an $800 loser. So we lost $886 over 5 weeks. And is it over 5 weeks? Shoot, it's almost 2 months. So if I'd have stayed in this and just kept at it with the juice, I'd have been fine. But the stock is going up, and so we're good with that. All right, so that's a loss of 886. DHI, okay? And I've only been in this, well, we started this on February 24th, and you can see the last positions here. We got out today on May 2nd, and let's see how we did. We made $11,000 on this position, okay? So DR Horton did move down from where we started. We had a fairly low delta on the base position because we were kind of close to the money. And we just kept selling against it. So that one worked out really well where we made $11,000. So plus $11,600 on one, minus $886 on the other one. Let's see how we did on the third one. And this is the newest of the positions, so it may not have had enough time to kind of take root. We made $669 on this overall. So I would say when you net all 3 of these out, we'd made about just over $11,000. And most of them have started here in this little bear market that we've had. This one just started really April 7th, and here we are May 2nd, so not even a full month in this one. So, the trade to the downside, the juicy put, you could see on 2 out of 3 of the instances we made money on the juice, and the stocks they're all trending up now. They all did trend down now, so we were right in the beginning, but the juice kind of saved us on all of them, if you think about it. Now, maybe on that middle one where we did, the first one where we lost $886 or whatever, we could have done better by, maybe staying in it longer or selling deeper in the money to protect having it go against us and things like that. But this is part of the learning process on this way of thinking, that we want the stock to start here and move down here, right? If it moves down, we make money. And that's what happened with DHI, and that's what happened with JD. The other one kind of moved up against us a little too much. So we want it to move down for us, okay? When in a covered call situation, we want it to move up for us because then you maximize your gains. Now I'll go back and look and see what we did wrong and all that, but I'm pretty sure that we may have wanted to be a little bit closer to the money when it was moving up against us, just here in this last week. Because I think if I checked it last week, when I did check it last week, I was up quite a bit more in all of these positions. But since the stocks have now gone up this week, they've moved against us. So I hope that's been instructive for you. And we're going to keep doing these, and we're going to keep learning together. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.